IRS Internal Revenue Service news dated November 6, 2019. 401k contribution limit increases to $19,500 for 2020. Catch-up limit rises to $6,500. Washington. The Internal Revenue Service today announced that employees in 401k plans will be able to contribute up to $19,500 next year. The IRS announced this and other changes in Notice 2019-59. Here's a PDF file link in this presentation, which we will have a link to in the description, posted today on the IRS.gov website. That's IRS.gov. This guidance provides cost of living adjustments affecting dollar limitations for pension plans and other retirement-related items for tax year 2020. Highlights of changes for 2020. The contribution limit for employees who participate in 401k, 403b, most 457 plans, and the federal government's Thrift Savings Plan is increased from $19,000 to $19,500. The catch-up contribution limit for employees age 50 and over who participate in these plans is increased from $6,000 to $6,500. The limitation regarding Simple, that's the SIMPLE, retirement account for 2020 is increased to $13,500, up from $13,000 for 2019. The income ranges for determining eligibility to make deductible contributions to traditional individual retirement accounts or IRAs, to contribute to Roth IRAs, and to claim the Savers Credit all increased for 2020. Taxpayers can deduct contributions to a traditional IRA if they meet certain conditions. If during the year either taxpayer or his or her spouse was covered by a retirement plan at work, the deduction may be reduced or phased out until it is eliminated, depending on filing status and income. If neither the taxpayer nor his or her spouse is covered by a retirement plan at work, the phase-outs of the deduction do not apply. Here are the phase-out ranges for 2020. The single taxpayers covered by a workplace retirement plan, the phase-out range is $65,000 to $75,000, up from $64,000 to $74,000. The married couples filing jointly, where the spouse making the IRA contribution is covered by a workplace retirement plan, phases out range is $104,000 to $124,000, up from $103,000 to $123,000. For an IRA contribution who is not covered by a workplace retirement plan and is married to someone who is covered, the deduction is phased out if the couple's income is between $196,000 and $206,000, up from $193,000 and $203,000. For a married individual filing a separate return who is covered by a workplace retirement plan, the phase-out range is not subject to an annual cost of living adjustment and remains $0 to $10,000. The income phase-out range for taxpayers making contributions to Roth IRAs is $124,000 to $139,000 for singles and heads of households, up from $122,000 to $137,000. For married couples filing jointly, the income phase-out range is $196,000 to $206,000, up from $193,000 to $203,000. The phase-out range for married individuals filing a separate return who makes contributions to a Roth IRA is not subject to an annual cost of living adjustment and remains $0 to $10,000. The income limit for Savers Credit, also known as the Retirement Saving Contribution Credit, for low and moderate income workers is $65,000 for married couples filing jointly, up from $64,000, $48,750 for heads of households, up from $48,000, and $32,500 for singles and married individuals filing separately, up from $32,000. Key limits remains unchanged. The limit on annual contributions to an IRA remains unchanged at $6,000. The additional catch-up contribution limit for individuals aged 50 and over is subject to an annual cost of living adjustment and remains $1,000. Details on these other retirement-related cost of living adjustments for 2020 are in Notice 2019-59. There's a PDF link in this section. We'll have a link to this webpage in the description. It's also available on the IRS website found at IRS.gov. That's IRS.gov.